Fears of economic decoupling between the United States and China have sent shockwaves through global financial markets, resulting in a significant decline in Chinese tech shares. The Hang Seng Tech Index fell by 1.6% on February 25, 2025, contributing to a two-day loss of nearly 3%. This downward trend was mirrored by the Nasdaq Golden Dragon China Index, which plummeted 5.2% the previous day. The catalyst for this market turmoil was President Donald Trump's sweeping directive aimed at curtailing investments between the world's two largest economies. Investors are increasingly apprehensive about the potential ramifications of Trump's renewed scrutiny on Chinese companies, recalling the tumultuous trade relations of 2022 that nearly led to the delisting of numerous Chinese firms from U.S. exchanges. The geopolitical landscape has intensified, with fears that a return to such tensions could harm the already fragile trade relationship between the U.S. and China. In stark contrast to the reactions of U.S. investors, those in mainland China seized the dip as a buying opportunity. On the same day the Hang Seng Tech Index fell, mainland investors poured an additional 22 billion Hong Kong dollars, $2.8 billion into Hong Kong stocks, particularly favoring the burgeoning artificial intelligence sector, which has been prioritized by President Xi Jinping. As noted by Ken Wong, an Asian equity portfolio specialist at East Spring Investments, U.S. investors tend to take profit much quicker, reflecting a more cautious approach compared to their Chinese counterparts who appear more optimistic about the long-term potential of tech developments in China. The divergent performances of Chinese tech giants further illustrate the contrasting investor sentiment. For example, Alibaba's American Depository Receipts ADRs saw a staggering 10% drop, while its shares in Hong Kong managed to limit losses to less than 4%. The ADRs were trading at a 7.6% discount compared to their Hong Kong counterparts, the widest gap since May 2022, indicating a growing disconnect between U.S. and Chinese market perceptions. Prior to this recent downturn, Chinese tech firms had been experiencing a significant rally fueled by investor enthusiasm surrounding advancements in artificial intelligence, particularly after the announcement of DeepSeek, a promising AI initiative. This surge, predominantly driven by mainland traders, saw cumulative investments nearing 240 billion Hong Kong dollars this year alone. The anticipation of an impending crackdown on Chinese chipmakers by Trump's administration further galvanized mainland investors, who interpreted such measures as a potential acceleration of China's quest for technological self-sufficiency. However, the U.S. market remains wary, particularly in light of Trump's directive to reassess the ownership structures of foreign companies listed on American exchanges. This move has raised alarms about the future of the variable interest entity structure, which has been pivotal for many Chinese firms listed in the U.S. An analysis of filings by 14 U.S. pension funds revealed a consistent trend of reduced holdings in Chinese stocks since 2020, reflecting a growing preference for distancing from China as an investment theme. Despite the recent volatility, the Hang Seng Tech Index has still managed to gain over 27% year-to-date, indicating a broader optimism among certain investors about the future trajectory of Chinese technology, especially following President Xi's high-profile discussions with tech industry leaders. As Zhang Wenkai, managing director at Xingqi Asset Management Company, expressed, this is without doubt a buying opportunity for southbound investors like us, especially as the drop in ADRs does not impact the changed narrative around China tech. Looking ahead, the landscape for U.S.-China economic relations remains uncertain. With the Trump administration signaling a hardline stance towards China, market participants will need to navigate not only the immediate impacts on stock valuations but also the longer-term implications for investment strategies in a potentially decoupled global economy. As both sides prepare for a tumultuous period of geopolitical maneuvering, the tech sector will undoubtedly play a pivotal role in shaping the future of U.S.-China relations and global market dynamics. As the year of the snake unfolds for China, the nation finds itself at a pivotal juncture marked by both promise and peril. The early months of 2025 have seen a notable surge in Chinese confidence, largely attributed to a series of strategic moves and a shift in international dynamics. particularly concerning its relationship with the United States under President Donald Trump. While challenges remain, recent developments have sparked optimism among investors and policymakers alike. The month began with significant excitement in the tech sector, highlighted by the unexpected success of DeepSeek, an artificial intelligence startup whose reasoning model took the market by storm. This breakthrough not only jolted U.S. stock markets but also positioned China as a formidable contender in high-tech industries traditionally dominated by American firms. According to RAND researcher Gerard de Pippo, the juxtaposition of China racing ahead as a technological powerhouse while simultaneously grappling with economic stagnation paints a complex picture. Although these narratives appear contradictory, both are true. In a strategic pivot, Chinese President Xi Jinping extended an olive branch to the nation's business elite, many of whom had felt sidelined in recent years. This was exemplified by a high-profile meeting with Alibaba co-founder Jack Ma, who had previously clashed with the government over regulatory issues. As Xi recognizes the urgent need for economic growth, he has begun to offer the private sector more latitude, signaling a potential shift in policy that could benefit both domestic and foreign investors. The response from global markets has been striking. Following the positive developments, the Hang Seng Tech Index surged, with major players like Alibaba witnessing substantial gains. This resurgence can be viewed as a collective sigh of relief from investors who had previously retreated amid Xi's regulatory crackdowns. As a result, Chinese stocks are now outperforming many of their U.S. counterparts, leading analysts to speculate on a renewed interest in China's tech sector. Adding to this complex narrative is the evolving U.S.-China relationship under Trump's administration. Initially marked by threats of extreme tariffs, Trump's recent conciliatory gestures, including an invitation to Xi for his inauguration and a more lenient approach to trade, have eased tensions significantly. Trump's willingness to engage with Beijing, even as Xi asserts military might in the region, has created an environment where both nations appear to be seeking a balance amid rising geopolitical uncertainties. Simultaneously, China is keenly aware of the shifting landscape among its regional neighbors. Recent diplomatic overtures to Japan, despite long-standing tensions, illustrate Beijing's efforts to reset its foreign relationships as it navigates the turbulent waters of U.S.-China relations. Analysts have noted that while these gestures are a good start, the underlying geopolitical tensions will continue to pose challenges to a truly transformative bilateral relationship. Moreover, Turkey's National Intelligence Academy has released a report suggesting that a weakening Chinese economy could present opportunities for Ankara within its regional context. As China expands its influence through initiatives like the Belt and Road Initiative, Turkey is advised to remain vigilant and strategically engage with regional partners to safeguard its interests. The report emphasizes that China's growing presence in Central Asia and the Middle East could lead to competition that undermines Turkish influence in these historically significant areas. Despite the optimism surrounding its economic prospects, China's challenges remain formidable. The economy is still grappling with slow growth and rising debt levels, particularly in the property sector, which has raised concerns among experts about the sustainability of its economic trajectory. Demographic issues and the strict control exerted by the Communist Party further complicate the investment landscape, casting a shadow over the brighter market outlook. In conclusion, as China embarks on this transformative year, the interplay of domestic strategies and international relations will be crucial in determining its trajectory. The developments in the tech sector, Xi's outreach to business leaders, and the recalibration of U.S.-China ties suggest a potential for renewed growth and stability. However, the underlying economic and geopolitical challenges underscore the complexity of China's position on the world stage. As the year of the snake symbolizes transformation, it remains to be seen whether China can successfully navigate these myriad challenges while maintaining its momentum as a global player. In a rapidly evolving geopolitical landscape, military tensions between the United States, Russia, and China are coming to a head, raising questions about future defense spending and international relations. Recent developments have brought renewed scrutiny on military expenditures, particularly following a proposal from former President Donald Trump which has garnered unexpected support from Russian President Vladimir Putin. This proposal aims to have defense budgets for the U.S., Russia, and potentially China, a move that could reshape the dynamics of global military operations. On February 25, 2025, the U.S. military confirmed the downing of a second Chinese balloon, marking a significant moment in the ongoing tensions between the two nations. This incident, which follows a similar event earlier in the year, underscores the escalating scrutiny of aerial reconnaissance activities and the broader implications for U.S.-China relations. The military's response reflects a growing concern over surveillance and national security, particularly as military spending worldwide has reached an unprecedented $2.43 trillion in 2024. Fueled by heightened security concerns. In a televised interview, Putin characterized Trump's suggestion to cut military spending by 50% as a good proposal, indicating Russia's openness to discussions on this matter. "We could come to an agreement with the U.S. on cutting spending, we're not against it," he stated. This willingness to negotiate comes despite Russia's military budget expanding significantly since its intervention in Ukraine in 2022, which projected defense spending to reach 8.7% of its GDP by 2024. China's response to Trump's proposal has been notably muted. When questioned, a spokesperson from the Chinese Foreign Ministry highlighted the importance of major powers taking responsibility for fostering peace, emphasizing that China's defense spending is essential for safeguarding national sovereignty and development interests. China remains steadfast in its commitment to the path of peaceful development, the spokesperson stated, signaling that Beijing is unlikely to engage in a military budget reduction without assurances of mutual cooperation. The backdrop of these discussions is marked by the increasing assertiveness of China's military presence in the South China Sea, which has raised alarms in neighboring Australia. Recent reports indicate that Chinese naval task groups have been operating in Australia's northeastern maritime approaches, conducting live-fire exercises with little prior notice. Such actions not only test Australia's naval capabilities but also strain its diplomatic relations with Beijing. This pattern of behavior reinforces the notion that China's military maneuvers are becoming more aggressive, often contradicting its diplomatic overtures. As the situation develops, the implications of these military spending discussions could be far-reaching. The prospect of a trilateral meeting involving the U.S., Russia, and China raises questions about the future of arms control and international military cooperation. Experts suggest that while the idea of having defense budgets could lead to a reduction in global military tensions, it remains contingent upon the willingness of all parties to engage in meaningful dialogue. In conclusion, as we look ahead, the dynamics between the U.S., Russia, and China are likely to continue shaping global military strategies and expenditures. The coming months will be crucial in determining whether substantive negotiations can take place or if military budgets will keep climbing amidst unresolved tensions. The world watches closely as these nations navigate a complex web of diplomacy, defense, and international relations, with the potential for both conflict and cooperation lingering in the balance.